Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock with news that's all about interest rates today. The big story is a sharp turn to risk aversion. And locally, we can see investors piling into New Zealand government bonds as one of a number of safe havens. This demand for risk-free bonds is such that it is pushing down yields very sharply. Part of the problem is that the traditional risk-free benchmark, the US Treasuries, have an odour over their risk-free status. US government debt is racing higher. It can only get much worse if the US economy wobbles. That means debt ceilings will be reached sooner and defaults are an increasing possibility. Defaults and risk-free status are not compatible. So investors are piling out of the US dollar and into government bonds that have low or zero histories of defaulting. There are a number of these, especially in Europe, but the Australian and New Zealand government bonds are part of this. The New Zealand dollar is rising. The New Zealand benchmark interest rates are falling sharply. In the US, their first quarter 2019 current account deficit came in marginally worse than expected, but is a very small ratio to their GDP. In China, the stimulus is rolling out faster, but there's a deliberate effort there not to call it stimulus. Instead, they are accelerating progress, upgrading infrastructure, and expanding safety. That's stimulus with Chinese characteristics. None of these projects will dampen their demand, however, for iron ore. In the EU, their latest consumer sentiment survey came in more negative than analysts were expecting. And the Norwegian central bank hiked rate last night, taking them up 25 basis points to 1.25%. And they said they're likely to do so again in the near future. In the UK, their central bank has left policy rates unchanged, but they have sharply downgraded their view on economic growth. In Australia, after their prudential regulator signalled its sensitivity test was too tight, Westpac moved to loosen the qualifying criteria for mortgages. Westpac's changes were not available to investors or owner-occupiers with interest-only loans, though. But hours after making the changes, the regulator reacted with fury and Westpac backtracked, reinstating the 7.25% serviceability floor. US Treasury 10-year yield is now under 2%, down 3 basis points from yesterday. We should also note that New Zealand's 1-5 swap curve has now gone negative at minus 2 basis points. Gold has jumped a remarkable $40 today to $1,389 an ounce. That's a gain of 3% in 24 hours. US oil prices have jumped today, up 5%, as Persian Gulf supply tensions moved to front of mind. They are now just on $56.50 a barrel, while the Brent benchmark is at $64.50 a barrel. And the Kiwi dollar is firm against a falling greenback, now at 65.9 US cents, a gain of half a cent since this time yesterday. On the cross rates, we've risen too to be at 95.2 Aussie cents, and against the euro, we're holding at 58.4 euro cents. That puts the TWI up to 70.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.